Greetings, everyone, and welcome back. Thanks for joining this newest episode of the CADRE Animal Health Real Estate Channel. I'm Ron Evans, your host, coming to you from Austin, Texas, and we are bringing this video to you from our fine sponsors and our family of commercial real estate companies, including CADRE Construction, CADRE Animal Health Real Estate, Kudu Realty, Bluefin Design, and Paramount Floors. We are joined today by banker extraordinaire Brei Silvia from Live Oak Bank. Thanks, Brei, for being here.
Well, thanks for having me.
I'm always glad to have you and continue our conversations. Just as a quick reminder, if you like the content that we provide and you learn something, please give us a thumbs up. Consider subscribing to the channel, and you can certainly reach out to us by email or on our website, and we can discuss your specific real estate project in more detail. Love to talk to you about it. So, Brei, I think this is probably the fourth conversation we've had about banking, and this one's a hot topic because everybody wants to know the state of the union. We are in a turbulent time, to say the least, with construction prices doing what they're doing, interest rates climbing. I think there's a lot of fear and concern. What was the term you just used about this recession?
Oh, the most advertised recession I've experienced in my lifetime.
Yeah, and we've been through them. I know you and I both are in the industry for about the same amount of time, and it's always, kind of state of fear. It's always how bad is it going to be, and get everybody on pins and needles. I'm bullish, and I think you've said the same thing.
I am, and I'm definitely bullish in the space, in the veterinary space.
Exactly, and that's what we're talking about today. So let's talk about some of the things. I'll kind of kick us off, and I want to hear your feedback and your thoughts from the banking side. Let's talk about budgeting. So obviously, construction cost and the cost of vendor services, be it architects, engineers, those costs have gone up dramatically, particularly over the last year. And I think in some areas we've seen a little bit of that pull back. But I think some of the inflation is still hitting us really hard in construction. And you mentioned that like we experience, a project can very often be a year to 2 years in length. You don't even really know what the economy is going to look like at the end of your project. You could start the discussion right now that, you've got that aha moment in the shower one morning that you really want to have a new ground up veterinary hospital, and it could be a year before you break ground on it. And so it's really hard to plan for that. How do you plan for those types of increases and uncertainties in banking? How do you provide for that in the budget and the loan?
Well, I think the easiest answer is you beef up the budget. Right. And when I say you beef up the budget, you have a defined budget of how much you can spend as a borrower without over leveraging yourself. I mean, debt can be a blessing. Debt can be a curse. We certainly want it to be a blessing. And so what does that necessarily mean? Based today, when we're recording this, we would be building a budget. But we would be building a budget so much so that our construction contingency, which is money we're setting aside in the event cost increase, which they typically have been, especially in the past year. And we're building a construction contingency of 20 to 25% on a project.
Wow.
It's very easy to spend in equipment. I can have borrowers say, I'm only going to need $150,000 in equipment, and that $150,000 can certainly bloviate to $250,000. So we like to beef up and provide a budget. Some of our borrowers are, because of this experience, they're designing a shell, but they may not be finishing the conference room or the office and maybe only be finishing the clinical space, or maybe it's phase 1 of phase 2. But many of them they know one thing. They know that their floor plan does not work for them, or they're tired of paying money to their landlord. They recognize they need a state-of-the-art recruitment center because no one with 3, 4, 5 years experience, or if they're going to recruit, wants to work in an older facility that lacks the equipment and standards of a true state-of-the-art veterinary hospital. So they know they have to do something.
Right.
But most of the time, every borrower is confined to some level of budget. There is a tipping point.
Sure. So let's think about the construction cost as a percentage of the total budget.
Mm-hmm.
So when the general contractor, so we're a developer, and so kind of to better define that term, I always think of a developer as somebody who in broad terms, takes that raw land and turns it into a land where you can put a building, right? So it's the acquisition of the land, it's the improvements in the infrastructure, things like utilities and parking lots and detention ponds, and it's the permitting process, it's getting the zoning. That's all development, right? So you just ask a general contractor what a project costs, right? That's a fraction of the total. So it might, to build a shell building and then finish the interiors out, that could be, depending on your taste and your plans, that could be $200, $300 a foot. But it's a fraction still of the total cost of the project, because you're looking at land, which has been going, especially in Central Texas, our land pricing has been consistently and steadily going up. Then you're looking at vendor services. You have your architect and your civil engineer. You've got a designer very often on your project. Those things inflate over time, right? Then you have your interest rate and the fees you're paying your bank. So your clients, my clients, are having to look at this even with less certainty than they used to have. And when we share the timeline with them, which, by the way, the timeline has expanded too. I've got developments and projects where I have a development in Central Texas where we submitted for our permits, 22 acre, it's a master plan development, but it's been almost 1 year just to get our site plans. So you talk about uncertainty. How do you alleviate those fears, especially on the money side?
Yeah, I mean, it's not easy. Every borrower is being compressed. The cost of borrowing has certainly increased. And then we've seen the rising cost of dirt in itself, coupled with the cost of construction. And so it's certainly not easy. There's not a perfect formula for it. Right. I like to tell borrowers 25 or 30% of your project is built in just a soft cost. Land is a big misnomer, but if you go out and find a beautiful piece of land and you fall in love with it and it's $1 million, $1.5 million, you may have just used all of your budget, or at least 2/3 or a third of it. And so it's gone up, and it's certainly expensive. So I think, as an entrepreneur, you have to be, your biggest risk was probably starting your practice. And I think what you have to do is that as an investment that is worth something. That practice is worth something, and of course that diversification of your assets, that real estate property is worth something.
Yeah, let's not forget. I'm sorry to interrupt you, but that's a really important point. Let's not forget, and I always try to remind our clients, it's an asset. Right? You're not spending money to patent some idea and get investors and spin up a business, and then it fails, and then you have nothing to show for it, right?
Right.
So you're right. The practice has value, and so much of the time that's within their control, their dedication and their hard work to that practice. And the real estate has value too, the land and that facility. But you don't see high failure rates. We talked about that in the very first episode.
We don't.
Of this.
The average project, and we have the exact data because every tax return, we go back and we review the projections, what they actually did, and it's a data mine of information. And that's something I really enjoy, because in my prior life, we were good at collecting the information, but we never analyzed the data. So I really enjoy that Live Oak does that. But our average, and I'm going to give you a range here, but we have the exact data, we're seeing anywhere from 20 to 25% growth once they've moved in and built their new facility. And so
20 to 25% growth in their revenues.
That's correct.
Really?
And if they're a well-managed practice, and the veterinarians know what I'm referring to, there's data out there. I mean, Denise Tumlin puts data out there, AHA, AVMA, they all put data out there. And a well-managed practice, you're bringing 15 to 20% to the bottom line. I would say if you are working with a team around you, one of the things we like to emphasize is we work with specific veterinary consultants, or you could build a larger facility and your staff could have very low morale because the workflow has changed, their job function has changed, and their pay hasn't gone up, but they see the owners getting this big, beautiful facility, and there could be a little bit of low morale or disgruntledness. And so engaging your team and having a good team, whether it's a CPA, a vet consultant, a veterinary lender, a developer, so that they can see around those potential pitfalls of what could come, I think keeps you out of a lot of trouble. You're only as good as the people you surround yourself around. around. And so I want to surround myself around smarter people than me. I know that doctors and veterinarians do as well, but I would advise that, especially in a time there's a lot of turbulence.
And we're talking State of the Union, and some of those, the things that have changed that make it really complicated, that draw the process out over a long period of time, that make it uncertain, these things that create fear. When I've been in this business for 30 plus years, and even when I started in Central Texas doing ground up medical, as you know, we do a lot of medical and animal health real estate facilities. Every so often we would encounter a do-it-yourselfer. And they would say, we would encounter someone who was a do-it-yourselfer, and they would say, never, never, never again, right? Someone who kind of, like you said, they weren't really relying on those experts that they surrounded themselves. They might think they could be their own developer, right? Or they might think that they could kind of walk themselves through this process. With what's happened in permitting and in the growth of the bureaucracy within cities, and what people used to say, oh, in Austin, don't build there. It's so hard. No, don't build in Austin. Don't develop there. It's impossible. Well, that started trickling to the suburbs. And these were the suburbs that used to entice us and say, come develop in and, fill in the blank with any Austin suburb because we're not Austin. Well, that's what it's all becoming. And so the complicated nature is now is exponential to what it used to be. And so I think you're right. They need to look to these experts and put a team in place, which then I want to ask you this question. How much on ground up, people know design, bid, build. Mm-hmm. In other words, get plans, bid it out to a bunch of contractors, and then hire that contractor. The problem is that contractor now wasn't involved in design.
Right.
So they may be 5-6 months into it, and they may not have that. They need that contractor, especially in today's turbulent waters, to help them with that process up front. How much of that do you see versus design build, or where the contractor's hired up front?
Well, we see more collaboration now with the general contractor and designer, whether they are a design build firm. I'm a big believer in collaboration. Mm-hmm. The reason for that is you can design it, but architects do not know cost. Correct. It is like they're Monet. And they want to build and design a beautiful facility, but they don't know cost. A general contractor can look at those plans and say, hey, I can do that, but that's a lot more labor and that's going to cost a lot more. Right. If this were designed a little differently, I can automatically save you $20,000.
And they can't do that.
That adds up.
If they're not involved in that process.
That is correct. So I'm a big believer in collaboration. I'm a big believer in having a general contractor involved early on in the process, and also vetting out, talking to other veterinarians, vetting out, seeing the product, et cetera. I also think it's extremely important to work with a veterinary lender. I mean, we're the only veterinary lender that I know in the United States that has a veterinarian on staff. We are a big proponent and believer of our doctor clients being successful. And as such, we are collaborators. We bring people together. We want their project to be, again, a blessing. We're not in the business of ruining lives. And unfortunately, no business in the world can operate in the red, unless maybe you're the government, but they're not.
Right.
So it's so important that they have a team built around them. And if there's a little bit of cost overruns, overages, et cetera, do you have a lender that can be nimble with you and work through those components? And in conjunction with, well, what are some things you can do from the moment you open that can help you be more profitable? So, I say this, there's not a perfect solution, but I do know this for certain. In bad times, lots of money has always been made.
Absolutely. And
the world does not stop, nor will in the United States, especially in hot pockets of America, will we just stop loving our pets.
Right.
And so it couldn't be, it's still a great time.
I agree. And I think you and I share kind of that, positive, optimistic outlook about this business we love so much. Let me ask you just one more question before we wrap this one up. And I think it's important that, there's a lot of strategies that we can help our clients use to reduce their cost or to give them certainty about the future, right? It's a very, very tough time to be imagining building something. Talk to us about refinancing.
Sure. Great question. So typically, if you're experiencing 20, 25% growth, I mean, that's going to taper off, to continue that on and on and on would be a tough task, put a lot of strain on your staff. But, we do see, and we have these conversations with our borrowers that are in our portfolio. They are, when rates go down, I have no doubt the borrowers will be calling and say, hey, rates are down a point. Can you help me? We're getting busy. And of course, we want to keep them on the books, all the hard work that was invested in closing their loan and working with them.
I'm sorry, but you said keep them on the books.
Absolutely. All the work's done.
What I'm talking about is you're not selling these loans off.
No, we are not. We're a portfolio.
So you've got a long-term client here.
Yes, we're servicing the loan. We're going out to visit them, once every 18 months. We are servicing that loan.
Got it.
And so we want to keep them. And so we revisit that, and we want to help them, and we work with them. And every now and then they're in a position because maybe another lender is offering a teaser rate, or their local bank, or something they can't refuse. And it's a lot easier to probably refinance existing debt that you've already been paying for than it is a ground up construction of a multi-million-dollar facility that's based on projected growth.
Got it.
Not every lender is good at that. So I would say yes, as a borrower, for the most part, I can't tell you how many clients I have that built a facility 5 years ago, and they've already sold to a corporate consolidator.
Sure.
But they also have the option to refinance, or if rates should go down, we want to work with them. I would imagine any lender would. So, at the end of the day, it is certainly an investment. It's been a good one based on our historical data. And, if you're ready and you need to grow your practice, your doctors know their community better than anyone. I would not stop because of external factors.
Okay. Great. That's good encouragement. Thanks, Brei. Appreciate it. Thanks for joining us. We'll talk next time. Bye-bye.